Welcome to the Wealth Without Wall Street podcast, your guide to understanding how to get out of the Wall Street rat race and start your own mailbox money lifestyle. Now, don't let these handsome Southern draws fool you. These financial minds are teaching our country to enhance savings, increase cash flow, and create passive income, all without the help of Wall Street. Are you ready to break through? Now here are your hosts, Russ Morgan and Joey Murray.
Welcome. This is the Wealth Without Wall Street podcast. Your host, Joey, the Italian Stallion Murray, and Russ, the idea guy Morgan. Russ, we got a lot of kids, bro. Not together, separately, but combined. That's a lot of kids, man. I'm expecting my fifth little girl at the end of February. Have I said that on the podcast yet?
Yes, I think you have. I don't know. Maybe you haven't. But I know last week, Dr. Jimbo Smith talked about paying for weddings. And he said, forget college, think weddings. And I saw your eyes just like you're doing the multiples.
Just glazed over, just in another world.
Oh, my goodness, man. It is so fun. I got a funny story about kids. So I was... not too long ago, so my sister-in-law, my wife's sister, has 11 kids.
Okay, there's no comparison.
Yeah, so I mean, you can keep trying, bro. You're almost there. You're about halfway. A couple of children ago, she and I happened to meet at my wife's dental practice, and we're getting ready to leave. And so our kids are big friends, and she had probably 8 at the time, and so my 4 is with me. And we're like, hey, you guys want to go grab lunch somewhere? Yeah, sure. So we go into the Chipotle. My sister-in-law and I, because her husband, who's an orthopedic surgeon, of course, he's at work. My wife's a dentist. And here's the two of us walking in with 12 kids. You should have seen the faces of people, bro.
Oh,
you're talking about
like
having a lot of kids. I guess now they probably get that because they have 11. But she and I walked in there, and literally somebody walks up to me, and they're like, do you guys like run a home or what is this? It's like, no, these are just our kids. What are you talking about? Oh, but we're not together. That's yeah.
Let me clarify.
So the purpose of me telling that story and you talking about kids is that I do think it's so powerful for us to think about our kids as it relates to money, right? I mean, this is something that we've talked about a little bit. We talked about some of the books back in the episode that we did when we interviewed Connor Boyack and the Tuttle twins, but we don't really get too deep into how we're using our finances and involving our kids. But after last week's episode with Dr. Smith, it kind of dawned on the two of us, we need to really dig into how all of that works.
Well, this is a hot topic. I mean, we've been asked this over and over from people because once they start to see the pillars of wealth without Wall Street for themselves, what's the first thing that they have to say?
Wish I would have started this like 20, 30 years ago.
Right, because guess what? We're in the same boat. This is where everything starts for us, was learning this for the first time. So when we learn something great, we want to pass it on, right? How do we do that?
Yeah, I was talking to a guy the other day, and he went and bought that book, Becoming Your Own Banker, right? And he shoots me an email back as a response to, I just said, how'd you like the book? And he's like, where the hell was that book 20 years ago?
So this is a real issue. We all have the same desire, right? We want to give down to the next generation the things that we've learned, but it's almost like a new legacy. It's starting with you. You're at that starting line, and you don't want it to end with you alone.
Right. And I know that you're like, I need practical ideas. I want to know like how you guys are using these with your kids. How are you using this to grow your wealth? And also, how are you planning to leave this to the next generation? So today's episode, we're going to cover a little bit of all of those things, give you some very nuts and bolts parts so that way you can actually apply this into your situation. If you have questions, as always, reach out to us. You can go to the website. You can schedule a free 15-minute call. We'd love to have a conversation with you because we know that, like us, this wasn't something that was taught from the very beginning.
That's right. In fact, I even point back to Nelson. We're talking about Nelson Nash, the author of that book, Become Your Own Banker. He didn't even learn this stuff until he was 49. And of course, he's saying the same things we are. But what he's done, and he's continued, like what Jimbo talked about last week, Dr. James Smith. I'll call him Jimbo. But he has made it a point to have family get together and say, here is your policy that I bought on you. I mean, who doesn't like the sound of their own name?
That is a very important part there. I love the way that he brought that in. And that's kind of why we're having this podcast today, is that we understand that there is lack of education, that you weren't taught that thing. And why weren't you taught about this sort of stuff, Joey?
Because they didn't know.
Who?
My parents.
No, they didn't know.
My grandparents didn't know.
No, they didn't teach them, and they didn't teach them. And so that's kind of the beauty of us learning these things, because now we can teach it to our kids. So when I'm sitting down with my 8-year-old Betsy and she wants to play Cash Flow for Kids, I love the fact that in a game format, she's able to learn a little bit about money. But the next step is us showing her how we're actually doing things with her money and with her policies and life insurance, the way we've set them up. And I know that that's going to be the kind of thing. But there's also some like pushback, because sometimes we talk about having insurance on kids. There's some common kind of like, what you talking about there?
That's
Willis?
not something you want to necessarily, be talking about with your friends. Like, hey, yeah, I just took another policy out on my daughter. Like, what? Like, why would you do that? There's almost this feeling of like, that's really morbid. Like, why would you do that?
Yeah. And that happens because, look, I'm just now taking out the second policy on each one of my children. And there's some things, there's some limitations that we have as to how much money we can put in policies for our kids. But, my kids are going to be learning along the way. And I don't want them to have any limitations. If something happens in their health down the road, I want them to still be able to maximize these same sort of plans, these cash flow plans, the way we're setting them up for themselves later on down the road. Because you and I have been doing this long enough. We see a lot of people who unfortunately can't get insurance.
Well, there's always the unknown. There's always things that pop up that have nothing to do with how you live. It's just how you're made up genetically, or something happens that stands in the way of now your insurability. And so I've had people say, man, I wish I had done this for my daughter, for my son, whomever, because now this won't even be possible for them.
Right. Well, and I mean, who better to be able to help them avoid that conversation than you, right? Who to help them know how money really works than you? You're the perfect person to teach them. This is a great episode for you. So let's dig into some of this, Joey, because at the end of the day, you and I were not taught this. I mean, our families were pretty much broke. I mean, we've talked about that at length. And now we've been playing catch up.
Oh, yeah, absolutely. And I think that you have to have a plan for this. This is not something that is going to just happen. And also, let me say this, just buying a policy on your kid doesn't continue the legacy, right? There's more to it. I love remembering being in these seminars with Nelson teaching. You'd brought me to him early on. We were first learning all this. And there's Alexandria, your oldest daughter, sitting in the room taking notes. I mean, she could hardly write, but she was taking notes from Nelson Nash himself.
Yeah, she was probably maybe 8 at the time, and we kind of had it like a little book report, if you will, for her to listen to the seminar. It was an 8-hour seminar. It was an all-day thing. And she got to sit in there and listen and hear things. And of course, a lot of that didn't resonate, right? But here's what did, is that she was at a financial conference. Her dad was at a financial conference, and she saw other moms and dads at the financial conference. So then that became a little more normal. So over the years, when she's come to other things with me, it's not unnormal for us to be talking about money, for her to be in an environment, maybe to be talking to an accountant or listening to an attorney, figuring out like these are the normal things. So when she's older and money makes more sense to her and there's more uses for it, she'll be that much more inclined to seek advice and to work with people who already are similar to her and her philosophies.
Yeah, no doubt. And up to this point, I really haven't taken some of those steps of getting my daughters involved. I've been like, they're a little young still. I don't know. So we've focused on like the Tuttle Twins book series that Connor talked about, Connor Boyack, when we interviewed him earlier this year. And that's been super helpful because it brings up topics that are economics and finance that are in a way that they understand. It speaks their language, so to speak. It's a story. And they're starting to ask questions from that. I've already told you my Lily Kate, my second. I mean, she loves the game cash flow for kids. Crushes me on a regular basis. I mean, now partly that's just the roll of the dice. Okay,
Right.
There's not a whole lot of skill there in some cases, but the dice will crush me. Okay.
Well, here's the key is that the older your kids are, so if you don't have the game cash flow, if you have kids, I'm saying probably ages 10, 11 and under, cash flow for kids is a great, easy game for you to get. If your kids are maybe 12, 13 and above, go ahead and buy the adult version. Go ahead and buy cash flow. These are games that were created by Robert Kiyosaki, the Rich Dad, Poor Dad, and you'll see that on their board games. But those are the games that once I've got into teaching my oldest, and we've played that a few times, it's really kind of the light bulb starting to go off. She realizes the way to get out of the rat race, having to go to work for money, is when I have more money working for me.
Oh, that's absolutely it. And it's so cool for that to click. I mean, it's simple. A kid can understand it, but I feel like we just woke up to that in the last 10 years.
Yeah, it's not. I mean, again, it's easy for us to forget the little things. And it's one of those things why we want to do this episode and talk about how do we build wealth within our family? How do we buy life insurance policies on our kids? Not for the sake of life insurance, by the way. By the way, I think now I'm going to have almost $1 million of coverage on each one of my children. But that's the minimum amount of death benefit that the government would allow me to have in order to put the amount of cash I want to put in there. Because, yes, we've talked about we have weddings coming up.
Oh, my
We may
goodness.
have college, right? We may have businesses. We may have houses, cars, all of these things that these individual policies that we've set up on each one of them will be able to be their own little financial institution. It'll be the place that when they want to buy something that I can sit down with them and we can look at it with their name on it. Because again, as you said a second ago, everybody loves to hear their name and they can see what it's doing, how it's growing. We can talk about compounding interest, but also we can talk about when there's a purchase to be made, say that first car, because that's only like 3 years away from me. That's 4 years away for you.
Yeah, don't remind me of that, by the way. I mean, I still want my girls to be little girls, okay, not driving girls, because I'm just.
Well, it's coming, but think about that when you get to sit down with her and you guys look at the car, and of course, I know that you're going to put her to work inside the Stallion Marketing Company, right?
That's right.
We've got that set up in order to be able to take advantage of some of those things that we learned earlier in one of our podcasts with Todd Martis. And, having our children who are great with social media, somebody who can help us in that, can earn an income, which, by the way, can avoid some of the taxation that otherwise we'd give them anyway. Well, that's money that can go into their plans. That's dollars that can be used to help pay for their first car.
That's right.
First car.
And let me go ahead and say this too. I'm really grateful that we've had a lot of questions on the kids' policies because it's really lit a fire under me. I mean, I've been procrastinating personally. I started with myself, getting the coverage that I needed on myself for these policies, on my wife, and I've just been putting off doing it on my kids. But as a result of this podcast, I've made applications on all 4 of my little girls to go ahead and get them in place. Because I don't want to leave this legacy behind with me. I want it to continue with them too.
Well, and that's important. So let's kind of get into nuts and bolts because a lot of people don't understand. Like, okay, the most common question we get is, should I buy the policy on the kid first? And the answer is always no. We always buy the policies on ourselves because in the event that something happens to us, there's nobody around to keep funding those policies we buy on others, right? So
That's
first
right.
we got to take care on ourselves.
But it makes sense in a certain way when you start to learn about this and you think about the amount of time that compounding interest has to work, you think, oh, well, maybe I should just buy it on my kid because then it'll grow faster because it's got longer for it to grow and all this. But that's not the case.
It actually doesn't grow faster. It has longer. And so the thing is that the more you understand these insurance policies, they have a guaranteed growth rate inside of them.
That's right.
They're guaranteed to get better each and every year. That's why we put money in them. People sometimes are so dumbfounded by why we love these as our foundational tool because we want something that gets better every single year. And these things are actually mathematically created to get better every year, meaning they have to grow. Unlike some things that we have that usually get worse, right? As we age, things become more expensive. things start depreciating. That's unlike these insurance policies. That actually cash value is growing to the death benefit. So the older you are, it makes sense that cash is having to accelerate because you're getting closer to your mortality age versus a kid. They have 60, 70, 100 years. I mean,
Yeah.
how long do they have before their mortality age? So it's a long period of time. So they actually grow a little bit slower.
That's right. So again, let's back up again. The first step is to buy policies on yourself, and you want to try to max that out. Okay, so that's for a couple different reasons. Let's talk about that. First, your home base is whoever is producing the income to continue the financial wherewithal of the family, right? If that person is gone, you need to have that person protected, their life protected against loss. So
Well,
that's obvious reason.
And most people don't know, if you don't know this, some people, if you're sitting there and you're like, well, can I get as much insurance as I want? The answer is no. There's actually a limit to how much insurance that the insurance companies will give us. And it's based upon our income and our assets and our age. So I'm just going to use myself as an example, being a little over 40. Usually they will allow me to have about 25 times my income. If you take that number, that's how much death benefit they would give me. So you can take your income, multiply it by somewhere between 20 and 30 times, depending on your age. Now, once you go over age like 50, it starts going down. So it'd be 20, 15, 10, stuff like that. But then you can get an idea, well, how much insurance would an insurance company give me? Well, now, if we're looking at that for our kids, an insurance company will only give a kid typically up to about $1 million in coverage. Hence the reason why these new policies I'm putting in place will max out that $1 million. But they will only let me get that up to half. I have to have at least $2 million. They will only let my kid have half of what I have.
Right. So there's another reason to max out your own personal human life value. That's what they consider that maximum that they'll give you in death benefit, because it also doesn't limit what the kids can get, especially over $2 million on yourself. So want to be clear on that. So that's kind of step one, home base, if you will. Step two, starting those policies on your kids. Again, we talked about the limits on that, probably $1 million or maybe less in some cases, and no more than 50, maybe 60% of what the parents have.
Yeah, so as we're buying policies, again, what is the purpose, right? So the purpose is not to have life insurance on the kid. That is a benefit. And by the way, it's important because we do see in our business, we see people who can't buy insurance. But what is the purpose? What are we trying to use these dollars for?
So this is to finance all the things that we're going to buy anyway, right? As those kids grow up, which, by the way, Dwayne Burnell has a fantastic book that illustrates the journey of his daughter, who I believe he started the policy on her when she was 12. Is that right?
Uh-huh.
And he kind of maps out how he utilized the policy on her life for all the various things, buying cars, paying for college, using it for wedding, and then for her retirement and so on. I mean, it's pretty amazing, all the different uses that he uses.
Well, and we did actually a video on that, right? So we're going to give that to you. If you want that case study, go to the show notes and you can actually download the case study and watch it there on YouTube, where we detailed an example of how that works. But you said why we're doing it is to finance things. I'm going to push back on that, Stallion. That's not the reason we're doing it.
Okay. Well, hit me with it.
We're doing it so that we can teach them how money works and we can leave money to the next generation. Because at the end of the day, if we don't teach them, yes, we're going to finance the things that they have, but the real purpose behind this is teaching them how money works and having them come to the family to be able to benefit from it.
Well, of course I meant that too, Russ.
I knew.
Come on. But I definitely will take a couple of notes out of people that I respect, their book here. So Nelson, having family meetings around this. Jimbo Smith having an annual time where he literally hands the policy update to them and goes over their policy with them. That is a tangible way that we can continue to teach our kids. So I love that. And then hopefully that we'll be able to take that to the next generation. So our kids' kids, just like Nelson has done, he outlines in his book, Become Your Own Banker, how he buys policies on the grandkids at birth.
Yeah.
So that's huge.
Well, and some people don't realize that you can actually buy a policy on a kid, and it's usually 7 to 8 days after they've been born. They'll allow you to buy an insurance policy on them. And just for this purpose that we want to get money at work, and we wanted to let it work as long as possible. And as they grow older and there's uses for it, you can show them what their money has. Because I remember when I was a kid, my mom got me a savings account. And so there was a little money there. And so she'd show me a little statement. I did that early on with Alexandria. She had a little savings account. But now it's their insurance policies. Now it's the cash values within inside of those policies that I can show them growing. We can talk about, well, why is it that we used an insurance policy versus the bank? I can say, well, let's talk about the differences between the FDIC and the insurance companies. Let's talk about the differences between taxes on money inside the bank versus the tax-free buildup within inside the life insurance policy. And when you get older, let's talk a little bit about the loan provisions and also the creditor protection. We can go on and on. I can teach her little things. And this is, of course, I'm not going to throw all this at one time. But here's a way. You're always talking about, well, how can I teach my kids about money? Well, you know all of these benefits. You know what these insurance policies provide for you because you're using them. You're using them in your business. You're buying real estate. But how do you teach it to your kid? So you take one example, maybe one of those little benefits that exist, and now you break that down and you start teaching them, what is that one word? What does liquidity mean? Why is that important? And you can show them the value of being able, a kid understands liquidity. Trust me. Think about whenever you won't let them ride their bike. Think about whenever you won't let them have access to their phone. Think about whenever you won't let them have dinner or have the dessert for that night. That's liquidity. Being able to access it, right? That's liquidity.
You don't feed your kids dinner. Come on, man.
Well, if it's late, sometimes we have dinner around my house.
Go to bed without dinner. No, we're not going to do that. But at the end of the day, this is part of the overall plan, right? Having policies on kids will be a tool to help continue that legacy. Because again, I probably said this a few times today, but I think we've been given a ridiculous responsibility. We can no longer say that we don't know, right? We weren't taught. Because we do know and we have been taught. And so the legacy of even just financial education or understanding starts with us. I don't care if you're the grandparents' generation, our generation, or our kids' generation. If you're learning this, the responsibility is with you. Now, if it ends with you, it's because you don't take proactive steps like what we're talking about on this podcast today.
Well, here's the thing too, and you've probably experienced this at some point in your life where you were given the responsibility to teach something, whether that was teach something when you were in school, teach something at your job. Who always learns more?
Oh, the teacher.
The teacher always learns more. So here's the benefit is that if you're not like super educated on how all of this stuff works, keep listening to our podcast. Ask us. We probably have a video that we can give to you and share with you as well. But you're learning it and then turning around and teaching one other, because that's always that when you learn anything and they talk about systems, I always tell you at the end, one of those steps is to go teach somebody. That's right. The purpose is so that you understand it better. And if you'll do that with finance, with your kids, then what'll happen is you'll learn more because kids are wicked smart. They will ask you questions like, well, why do you do that? What's that mean? And when you don't have an answer, if you don't have an answer for that, then that sends you back to learn. And there's a beautiful thing because they don't have that filter. Because if you tell somebody, an adult, that you're doing something and they don't understand what it means, they don't want to look stupid. So they won't ask, well, what's that mean? Typically, they'll just nod their head up and down, and both of you guys will go along. Why do you think so many people invest in 401ks? Because somebody else was doing it, and they thought, must be a good idea.
That's right.
But when you ask them, hey, by the way, if I were to loan you money today and I gave you the option to pay me 30 years from now, you'd want to know how much am I going to charge you? And if I told you, don't worry, I'll figure out how much I need in 30 years and then I'll charge you that rate to get it, what would you do?
Never sign up for it.
You would never sign up for it. But that's what everyone does when they sign up for the 401k plan, because they don't know what the rate's going to be. They don't know what taxes are going to be 30 years from now. We've already gone through the tax train is coming. We know that taxes are going to double. They're going to keep rising. But why do people do it? They don't ask that question because they don't have that filter. They don't want to look dumb. But kids are not like that.
That's right. And I'll tell you, we've mentioned this before. Another thing we want to help you with in this topic is not to silo your money, right? Families, typically, because they don't have this together mentality, this way of passing on information and advice, they keep their money to themselves. They don't allow it to pass from generation to generation. In fact, I'm going to give this real quick story. Recently, probably in the last year, I met with a ministry that was talking about estate planning, like looking at your estate plan. And they offered this kind of free consultation to look at your stuff. And I said, well, you know what? I'm going to just sit down with them. I'm curious to see what they would tell me. And also, what kind of things they would maybe help our clients with. And you know what? I sat down with them, outlined that, they asked all the questions. So what do you have in qualified plans and 401ks and IRAs and da-da-da-da-da, fill in the blanks. And I had all these blanks. There's all these blanks on my application, my information. It comes to life insurance, and it's like, whoa, this guy has a lot of life insurance. In fact, the guy was like, tell me about that. He's an older gentleman. And I just told him, I said, this is what I use. This is what our company does. And you know what? The estate plan that he spit out was pretty simple. Just keep doing what you're doing. There's no complexity.
Yeah.
Right? So this is our goal for this podcast, is that we have an estate plan that's simple, it is going to naturally pass from generation to generation to generation if we can continue the education that goes along with it.
Yeah, we want to have as little tax outlay in the future as possible, both from income tax and from estate tax. We want our financial picture to be simple. Why do we break it down into 5 pillars that were based upon things that have existed almost going back as far as we can see?
That's right.
We're not using the most typical things, the Johnny-come-lately ideas that everybody gets excited about, but nobody knows the questions to ask, and only the reason those things become so complex, the reason you really could never understand the statements that you receive from your financial institutions, go read a prospectus over 100 pages of legalese that you will never read. Why is it that complex? Because they make it complex because it keeps you in the dark. It's not for your benefit. And here's the thing. We want plans that are simple, straightforward. I put in $1, I have access to this money. I use it, I go buy a piece of real estate. I can go drive by, I can see that piece of real estate. I have real estate. I can drive by and see it. By the way, if it happens to be on the way to a vacation spot, I get to write off that a lot of that trip because I stopped by. I saw it. It was part of my thing. Who cares that I continued on and went to another place? That's not part of the thing. I get that benefit, but I don't drive by and go see my financial statement. I don't get to take my kids down to my financial beach house. Right?
That's right.
These are things that we're teaching for simplicity, but more importantly, to provide a richer legacy, to have our kids in a better position. Because going back to what we said earlier, is that we are the people. We're the ones that get to make that happen.
It starts with us.
Just because we were not taught doesn't mean that we don't have to be. And I heard a guy say this, and I'm sure there's a famous person said it, but he said, you don't have to be great to start. You just have to start to be great.
Man, I don't know that I can say it any better than that, Russ. I hope that this has been inspiring. I hope that it brings families together, creates closer knit family relationships, and it gets rid of that kind of that elephant in the room when it comes to finances, that it just becomes a part of the natural conversation of a family, and it continues with you. So thank you so much for listening in today. And
make sure to hit the show notes, because you can get access to that video and see exactly what we're talking about, because we share on there a way that this works in a family, and we're glad to always talk to you further about this. Thanks for stopping in.
This has been the Wealth Without Wall Street podcast. Don't forget to subscribe to the show to break free of the Wall Street mindset and begin building wealth on your own terms in places you understand, so that your wealth will never run dry. See you next episode.